Hey y'all, how we doing today? Today's lesson, number 11, is all about channels. I know, you may be thinking, well, channels are pretty easy to understand. Of course they are, but the problem with channels is that if you do not properly do them, or properly plan them, or be ready to be dynamic, they're not going to work out in your favor. Of course, we've talked about them with the last two lessons on how making the bottom trend line and possibly an upper trend line, and then horizontal ones. So today we're going to dive more into that, really cover this. This is the last real big charting thing. All you really need to properly chart is supports, resistances, and trend lines. There's other things we're going to add, for sure. Don't worry, this is a long unit for a reason, but your real basics ends today. So when it comes to channels, here's our topics for the day. First, we're going to look at how supports or resistances and trend lines can both form channels. Of course, supports and resistances are going to be horizontal, so you have horizontal channels. And then trend lines can be diagonal, even 1 degree up or down can be considered a trend line. And again, we're going to cover how to make those kinds of channels as well. 2, how to properly channel them, how to really chart them. Do you really get every piece of movement, or do you want to kind of move it up or down a little bit? And then also, what if there's a part inside of the channel that's in the middle, so it's like 3 lines almost, kind of like that, it's kind of going. Can you add midlines and such? Well, of course, we're going to cover that. Thirdly, channels do not last forever. Please find me a stock that's been for 5, 6, 7 years of a straight channel. That would be beautiful. Otherwise, it doesn't exist. So you need to be ready to understand that channels do not live. You're going to get burned and lose eventually. The point is, the time you get burned has a stop loss. So of course, we're going to cover that in a later series about stop losses. But again, you must put it inside your head. If you lose a trade on a channel, it wasn't your fault sometimes. They just break, and that's how it goes. Next, we're going to cover the best channel setups. I have found that the best breakouts are horizontal channels. Most times when you have a really, really strong stock in a horizontal channel, it consolidates and it breaks out. I'm going to show you plenty of examples of that. And again, these are the ones you should kind of key in on and really find some great success on. That's what I would do. And lastly, just like yesterday, we saw that your bullish setups can lead to bearish patterns and vice versa. Today, your bullish channels or your horizontal and ascending channels can also lead to bearish setups or even more bullish setups, right? So I want to show you how you need to be dynamic in charting, dynamic in channels, and understand it needs to all come from the place of foundation. Supports and resistances, trend lines, channels. That's the 3 foundations of charting. With that being said, we have about 7 or 8 great examples, and probably more than that. I want to get into this really hard and really show you some good stuff. No further ado, let's get into the lesson. So our first one is ADC. What I want to really show you is that supports and resistances can make a channel. And of course, we've talked about this. Let's do it again just to make sure we're good to go. So again, very horizontal. Again, you need to understand where relevance is. For channels that are horizontal, I do use the trend line usually, but you can use the price level. And of course, if I'm going to be doing just supports and resistances, price level works fine. But for a design channel that I found, I use the trend line. So I could come down here and start down here, but again, is it relevant? Absolutely not. Up here this high, is it relevant? Well, it's more relevant, but not as relevant as I want it to be. What I would do is come down here. I would see that we have a support area, click, drag right, extend right. Again, a good area. Again, this now comes down to preference. What I do is I can right click it, activate drawing, and now I can move where I want to move it. So again, it was just here. I would see that's only hit once. With the same exact idea of supports, I want at least 3 hits. I'm going to zoom in on up just a little bit and see right about there, I got 4 hits. We're going to apply the same idea we've always had, loading zones. When it's at the bottom, you can always make a loading zone, redraw as a channel. I want to get as many moves as possible. I'll place it here. The exact reason is this point right here, this point right here, this point, that point right there is close, again, and then right there. So now I have a channel. It's only 1.95%. And as we've discussed, the higher in your loading zone, the more risk you take on. So if I were to buy in exactly at 62, 63, which is a fine strategy. You bought in a good support, you got a value on the overall price action. But if this does break, because channels are known to break up or down, if this breaks down, you've opened yourself up to 1.95% more risk. The more you can wait into your channel and place a stop order above it, right? So if price action comes down just like this, as we talked about, it comes down to here, right? It drops down. I'm setting a buy order right here, right? I'd set it right above it, right? Because you have a 9 to 5 job. right? You may not be at the computer. If it continues to sell off, if this comes down and sells all the way off, you're not executed in. You're good, right? You can then tomorrow move your buy order down even farther. You can set it down farther. If it keeps dying, you're not going to get executed in. But just like this, if it took off, if you're like on a vacation trip or something, you get executed in and you're good to go. So again, the farther into your channel you can get, the better. But again, buying at the top is fine. Just know the risk involved. So here's our load-in zone. I'm going to make it golden like we always do. It looks really good. I like it. Just like we've discussed before, you need to have a resistance to make it a channel. So we've talked about this before. What you can do, which works really well, is that you can always come over here, redraw it, and then you can redraw as a channel again and just find the top, right? And again, you can put it up here if you wanted that to be your goal. I always again say 3 hits. Given this, I go down just a little bit farther and put it right about there and get the full move. So remember, the resistance is twofold. You're going to have one, a good area of where you think it's going to reverse it. That is where bears are going to take over and bulls are going to lose power. Second fold, it's where your price target should be. If you're about halfway up the channel, wait. If it has a good history, like this one has about 5-6 times hitting the resistance, wait it out, right? You don't want to sell too early. You want to have a good area of selling. That's going to be your resistance. So again, it lines up really well. And again, you can make the whole thing a golden channel if you want to. That looks really good. You can buy in right down here at this line and sell up here at this line. And again, it's a good easy 12%. Of course, you would then come over to recent price action and kind of see it's kind of been dwindling off, and that's fine. And again, anybody who follows my class correctly would have drawn a support and resistance in the middle here and would have seen possibly taking profits at 6% right over here. So again, you can have channels based off of supports and resistances. Let's check the next one. You can have a channel based off of supports and resistances. You can also do trend lines. Like we did yesterday, let's do it all the way through. So we're going to see a nice ascension. Let's try and figure out if there's a trend line involved. Again, I always start at the bottom left, go all the way over, and I come up. As you can see, your first hit be right about there. Sure, this could have been one for a while, but as of recent price action, it's not. So let's come back. You can see if I go any higher, that wouldn't work out in our favor. It would just make it harder. So we'll come over here and see, well, first click, we're hitting right there again. So let's come over a little bit farther, right about here, all the way over, and come up. Okay, so now we're in business. That's your first tap right there. I'd be inclined to go just a little bit higher to include, first tap, include this, and then we also are very close to that. Make this into a channel, and again, that would be your loading zone. Of course, you missed this move, and again, in reality, there has to be some times when it reverses too early and you don't catch it. That's just part of the game. It happens, right? You always buy at value. So again, here is our channel for loading, and again, if we zoom in, we can see this loading zone is about 3% wide, and again, could be a little wide, but again, that's not too bad at all. If you are more adverse to risk, you would have bought in a full move here, bought in a full move here, and been just fine. You probably would have missed a few of these, but again, it all comes down to your risk management policy. Again, to find an effective channel, you want to see if the support line and resistance line match. If you draw a trend line channel and the bottom to bottom line that you drew, your support, and your peak to peak line, your resistance, if they're the exact same angle, that's a fantastic sign. This is a great channel. If they don't line up perfectly, it's okay, right? But if they do line up perfectly, that to you is a brilliant sign of this should be a very successful channel. Again, they don't last forever, but as of now, you have a great sign of where you should buy into and where to sell at. So I'm going to come up here, right click, redraw as a channel, scroll up. As we can see, if we were to put it right there, we'd have once, twice, 3 times, 4. It looks really good. I'd be even more inclined to redraw it higher and go up to here. As you can see, once, twice, 3 times, 4 times, it's been playing really well, right? And again, this is where it comes down to what you want to do with taking your profits. One, could easily draw it here and be like, I just want to get, a full move from here to here is a good 20%. This right here to here was a good 20%. 20% for me is fine. And again, as we talked about the math in the first section, 20% gains is fantastic. Some people, though, would rather wait to get a full move. And again, some folks would be fine buying in here and waiting about 50 days for 64%. Someone would buy in here, want to wait, it would drop and come back up. Took them 40 days to make 44%, right? So some people have different preferences. It just comes down to what you like to draw. Again, I personally, what I would do was draw another midline in here, and we'll talk about this next. Draw it across, find as many peaks as possible where it hits, like that. Make sure it's about the same angle. And then again, you can sell half or whatever you want to do right there. But again, it comes down to your own preference of where taking profit makes sense to you. But again, if the support line and the resistance line add up and they're perfectly in sync, it's a fantastic sign. I like it a lot. Let's check the next one. So we've discussed CAT before. It's a really great example of an ascending channel, which you'd want to play. As we talked about, and I've kind of precursor to, there's some times you want to kind of draw midlines. There's a really good reason for that. So I want to differentiate. Your loading zone is not a midline. The two bottom lines that you draw for when you want to buy into is not a midline. That is exactly its own purpose of where you want to buy into and where you want to kind of load up your positions. A midline is much higher, usually about halfway or 3/4 or 1/4 the way up, where a lot of price action seems to either stop or start. That way, if it does it really consistently, you can have expectations that if it does die there, you could sell and then buy back in with some profit. 2, if it comes back down and shows some life, you could buy in a little bit early. But again, it's a great way for you to kind of see where price may stop or start, gives you an idea of where consolidations may take place. It also just gives you a better picture of what's going on. It's very similar to drawing our supports and resistances, like 4 or 5 lines. Sometimes ascending channels like this have about 2 or 3 midlines. I'll show you. So again, you should always start with supports and resistances. We're just gonna do the trend lines. So again, we're gonna come down to our bottom. And again, we did this the other lesson, so we're just gonna scroll up, hit right about there. And as we can see, we can do our loading zone right about here. But again, that's a good amount of, 2.52%, but we're missing a few of these moves in here. So if you're gonna do that, you can draw some midlines. So what I do is I erase everything. You can then make this line golden. I would wait to get all your lines drawn first. You just hit duplicate drawing, then activate, right? You can activate either one, it's okay. And then you just scroll up. I'm gonna do one here, looks good. And again, duplicate drawing. And again, when you actually duplicate it, it should activate it for you. Then you kind of scroll up and see there's one right about here. Duplicate, go up a little bit higher and see there's a support right about there. Duplicate, go up. So as you can see, we literally did exactly what we do with supports and resistances, but we did it with trend lines. So now instead of guessing, well, is this a good area to buy in? You now have 5 good trend lines to show you where things should be. And again, should you draw 5 or 6 every time? No, it can get very, very congested very quickly. But again, for CAT, it's such a perfect channel. You can then use maybe 3 or 4 and be just fine. I'll show you. So this looks really, really good. I would be okay if I just take this line and I make this one golden and I make this line golden. This will be my loading zone. Anything in here, I'm happy to buy into 100% of the time if it comes down and taps it. And then I'd kind of come over here and I can see, well, this is a midline that's really, really close. It's only about 2% away. I'll get rid of this one. That's okay. And then I can see that this is my resistance line. What I'm gonna do with this one is make it dotted. That way I know that it's just in the middle. It's a good way for me to indicate that it's not really exactly a support or resistance as much as it is a line where consolidation is gonna happen. And as you can see, it's a beautiful trend line channel, right? We can buy in anywhere in here. Looks really good. I also know that there's a chance for consolidation over here. And if I really wanted to, I could always duplicate a line, scroll it up and say, all right, I could also potentially buy in here. But again, the higher up I get, the more risk I'm taking on when this breaks down eventually. So again, that's how I play these. It always works out well for me. Let's check the next one. So we got TTMI. Again, you could have had a channel going on over here. And as we learned, when strong resistances or supports get broken, trend lines need to be changed. So again, we can see over here, we'll just draw a trend line. So again, it was bouncing off that, it broke, so a new trend has developed. We can then come over here, drawing our trend lines, scroll up and see, okay, those 3 match off perfectly. I like it a lot. And again, let's do a channel check. Ooh, these line up all pretty well, right? You can then extend left just to double check. See these, how well this channel had developed? It looks really good. But again, here's our problem. As of recently, the price action is not coming down to us. So what do? Again, I would right click, duplicate, scroll up. You can see right about here, resistance, 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 small support, price action stopped here. Looks like a really good area to buy into. Duplicate again, scroll up, and we can see that's a good resistance right about here. And so now, is the bottom line relevant? Sure, but again, I would not be as ready to buy in there. What you can do is then redraw your middle line as a channel, just like this. And you could say anywhere in here is my loading zone. If you're that adverse to risk that you want to wait for it to come back down perfectly and miss all this move, that's totally fine. And again, be ready to activate it. Activate it, move it up if price action is not coming back down. Now it's going to be your loading zone. And again, now we have a channel within a channel. It looks really, really good. And again, these are pretty small moves, 4 or 5%, whatever it may be. But you may get some 7% easy runners in here. But again, that's how I draw channels within channels. You just have to right click and duplicate. Always draw a loading zone. And then, of course, have your resistance. Simple stuff, right? But again, this is much easier to read than just kind of guessing where they're supposed to be, right? You always double check things, triple check things. It looks really good. Let's check the next one. So this is CDLX, really easy channel play. Again, I would just click my line here, go right, redraw as a channel, boop, looks really good, right? But as we can see, and again, this is only a small picture, it takes off on us. And what's the point of this? Well, the point is consolidation. And this is a massive lesson that no one really talks about. I've never really seen touched on in a lot of different teachings. And it's this: stocks can do three things: ascend, descend, consolidate. When it comes to channels that are horizontal in particular, the most important is consolidation. Consolidation is extremely key to figuring out and finding breakouts. When a stock is consolidating or it's going horizontally, something's happening. What's happening is that bulls and bears are fighting of who's going to take control of this area. Now, when it comes to swing trading, we really like enjoying the fact that we can abuse consolidation when it's a larger scale. Like this stock with CDLX, it's a larger channel that we could have abused, made 15-20% really easily, but it is consolidating. It's going back and forth, back and forth. Bears and bulls want to push it into ascension or into descension. When we can get a bearish setup, we want to kind of pull out and wait. But when you get that bullish breakout from consolidation, that's the key. Many of your big cap stocks started off as consolidation, picked up hype, enough volume that was positive came in and pushed that stock up. So your horizontal channels are consolidating. And when those consolidate, it leads to breakouts. That's why we buy in low, wait for a resistance, and then if it breaks out, we just hold, right? So again, horizontal channels are immensely important to you, right? You do not want to buy in at a bad price, but again, you do not want to sell too early. Consolidation leads to breakouts. I'll show you multiple examples. So again, we have CDLX. We would have seen this channel develop easy, 30%, comes down, easy percent, right? So we would have came here. And again, these are plays that we did make on our, our YouTube. We're going to then duplicate line, scroll up and see we have a support or resistance right about here. Duplicate line. And of course, you can use the price level as well. Come up, support and resistance, duplicate line, support and resistance. So again, in practice, as we've talked about, I would definitely come down here, make this my loading zone. Again, it's a pretty large one. Of course, it comes down to risk management. You want to take on that extra 4%, you can. But again, the longer the better. You can buy in here. Full move, full move, full move. It looks really, really good. Again, we have 100% movement from this channel to that channel. 100% movement from here to here. 100% from here to here. Very, very good 100% moves. This is a healthy stock, right? It has really good reads. And then again, we would have bought in here. Possibly sold here, and again, it started to consolidate. And again, it's really important to understand that when a stock starts to take off and breaks above, this is a sign of something huge, right? Because it's a breakout, and eventually it took off, and now it's ascending and it's taken off. So again, once this resistance was broken, you'd have to be inclined to make a new trend. You could have came over here and seen, well, this looks like a good trend to me, a trend up just kind of like that. And again, this is exactly like a bump and run we talked about. It came up, bumped up, and then ran down. So again, your consolidating horizontal stocks will lead to breakouts. Let's check the next one. So next is CLNE. We would have seen that, okay, we have some movement coming on, a massive move, and it comes down and it stops here. So I would be like, all right, we have a known support and resistance right here. Looks really good. I can then duplicate, scrolling up and see, all right, that's a resistance right there. Duplicate, scroll up and see that's a good support and resistance area. And then duplicate, scroll up and see that also is a good one. Really easy channel, right? Back and forth, really good healthy moves. You have an obvious buy-in area, and again, if you wanted to buy in, that's a good 5%. I would be more, I'd be more inclined to kind of scroll it down just a little bit, double check your work. Anywhere in here, I'd say anywhere in this area is good to buy. Make it golden, always make it identifiable. Looks really good. And again, you would have bought in here. You would have seen massive movement. Look at that. It consolidated, blasted off, and then it took off on us. Then as you can see, if you would have held, because it took off, even from here, it would have been a nice 125% move. You would have held for a long period of time. As you can see, we bought in here. We're still holding. It's now up almost 185%. So again, you may see stocks like this. Could you buy in over here? Sure, right? You definitely could. But again, I would much rather find horizontal channel plays that are consolidating and then buy in and then let it run. Again, let's check another one. So this is FCell. It's a really easy channel read. And again, just to do posterity reasons, here's our price level tool. This was your bottom. This was the main play during these months, was this line that we bought off of. You can scroll up. That's one. That's one. Anywhere in here is fine. I would probably say here for take profit right about there. So that looks really good. Super easy reads. Again, I would then maybe buy, do one more right there. This would be my buy-in channel. And this is where we're going to see a level of stop losses coming in. This would be my buy-in because while it's going up, it dropped down. We got stop lossed out over here. And again, it came back in, it showed life, and we bought back in over here. And again, horizontal channel, it's consolidating, something is happening. We bought in, it took off, now we're holding, and now FCell is on a whole new plane of reality, right? We have no idea where it's headed. And again, now that I broke a previous resistance, you can now draw a brand new trend line and say anywhere like this is definitely a good resistance. Redraws a channel, come up here and say, hey, brand new channel. And now that it's up here, you can then do the same exact principles of a trend line channel to this, right? We see it's a really good setup. Let's take this line and duplicate it. Move it on up and see that's definitely a good line. Duplicate it, moving on up, like the Jeffersons. Looking good right there. Oop, looking good right there. And that's all you need, right? We can then make our bottom one into a channel and say, hey, this is going to be our loading zone. This looks really good. And again, double check how big is it. All right, 5%. So again, you're going to be risking an extra 5% if you do buy in the top line. But again, the full move right here was 58%. So again, that's a 1 to 10 ratio of risk versus reward. It's a fantastic setup. I'll draw the top one as orange because this is a resistance. I want to be a little bit different. The middle line should be dotted or something so we know it's different. And there you go. Not only did FCell have a beautiful channel play, supports and resistances, it's now turned into a fantastic channel up play. And again, you buy in at this zone, you look really good. You could buy in at your dotted line, but again, you need to have an exit strategy if it does crash on you. 15% is not an exit strategy, it's too much. You should probably cut losses somewhere in the middle. And again, you could always redraw the channel and say, all right, that's really good there. That's my secondary buy-in. I want to sell if it breaks below this, and then you could buy back in. So again, it's all about planning. It's all about having little extra lines in there. And again, this is very easy to read. It's non-cathartic. It's not too many lines. Load-in zone, consolidation, potential reversal zone, resistance. Looks really good to me. Let's check the next one. So this is AKTS. Again, let's do the whole thing. Price level, anywhere in here would be a good buy-in point. And again, just looking at it, these are wicks. So make sure you have a buy limit order if it dips into the channel. And again, I would definitely put one there. I'd put one there. I'd put one there. I'd put one right about there, and then one about there. Right, 5 easy lines, plenty of 100% moves. That's our foundation. The foundation for this is set. And again, we would then take our bottom line and say, well, what's going to be our risk management down here? I would definitely be ready to say I'd buy in at about maybe 3% up. So maybe 1, 2, 3. So that's good. It's a good channel. I'll make both these my orange lines. And again, you can't duplicate price levels into channels, so you got to just make 2 of them. That looks really good. Buy-in lines, it has plenty of 100% moves. We buy in, right? It comes down the bottom. We bought in. This is consolidating. Bears and bulls are fighting over who's going to take over to get to an ascension or a descension. It then starts ascending rapidly. It takes off. You hold, you hold. You could probably sell anywhere in here and be just fine. But again, it's taken off. Now that we're over here, again, it's much more choppy looking, and I could probably change the time period to make it a little bit easier. But again, you can just take this line, come right, scroll up, redraw a channel, and see, okay, and this area was a really, really good area. For that, you can then just kind of come over here, scroll right, mid-trend line, and you could have played off of this very easily. Probably go to the 30-day chart and see exactly that. See how that midline worked out great for us? You see that? Looks really good. I'm personally going to delete this real quick. And again, redraw it. That's really good right there. Redraws the channel. That's our buy-in zone. Now that we've taken off, it's ascending. You gotta redo it, gotta be dynamic. Come over here, see that this was our resistance. Extend right. This looks great. This was a consolidation zone. So we're gonna make that dotted. And there you go, there you have it. You went from having a really, really good horizontal channel for months you could make money off of, and we're talking good money. We're talking easily 20% moves here, 18% moves. It takes off. You wait for it to have proper signs of life, new trends, and then you could have bought in here and again made another 20% really easily. And as we've touched on, old resistances become new supports. As you can see, it's testing it right now. So again, a great setup, a great lesson for you. So again, this is a very simple concept that I really want to beat in your head because we have supports and resistances as our foundation. Every stock, doesn't matter the time period, doesn't matter what you're looking at. I use the 180-day. Supports and resistances are always going to be your foundation. From there, you look for trend lines, right? Non-horizontal lines of support and resistance. That's second. After that, you look for channels. And of course, you're going to create channels from your supports and resistances and your trend lines. But again, you need to put tops on them and resistances. The support line is your buy-in zone. The resistance is your sell area. And again, channels have 2 big parts to it, risk and reward. We draw the load-in zone, whether it's a horizontal channel or a trend line channel, it shows you your risk, right? The bottom line says, hey, if you take this position at this price, you're going to be risking 3, 4, 5%. Anything over 6%, unless the reward's really high, I don't take. You need to redo it. All right, 6% is a medium win, so I would definitely go for 3 or 4%. That's your risk. Your resistance line shows you your reward, right? If it takes off on you and hits that resistance, what are you going to sell it at, right? You always want to make sure that your reward is higher than your risk, at least 2 or 3-fold for sure, right? We talked about that in our principles. So again, channels show that. One last thing I want to show you is how patterns form inside of channels. So peak is a fantastic example of that. Let's do the whole thing. Let's do the whole gambit. So again, I'm going to personally use trendline for this just because I want to make some channels. And again, price level is good, but you can't make channels off it. You place one, you right click, you can't make it into a channel, and that's going to be kind of annoying. So let's do trendline. Then again, let's find our supports and resistances. This is a little bit low, but again, it is relevant. But I'm just going to kind of move up just a little bit and say this is our baseline support area. You can then just duplicate, makes it a little bit easier on you. Scroll up and see that's definitely an area of support. Maybe that's going to be our loading zone. We'll check it out. Scroll up a little bit higher. That's definitely one. A little bit higher. That's close to one, but I'll just go with right about here. Looks really good. And then this looks really good. So there's 5 good lines. Again, looking at it, I would regret if I didn't make one here. That's good. Would have missed this, would have missed this. That's a really good looking channel right there. Again, let's do our loading zone. Seeing as a lot of price action stops around this area, and it's only come down here recently. Again, we're trading in real time. I definitely would have moved this up and would have moved this up. Right. Anything below that, I would have cut losses and I would have then bought back in to make my money back. This is going to be our loading zone. It looks really good. And again, this is going to be our resistance. I'll make this orange. So now I have my basics down. If I buy at the bottom of my channel, my target would probably be about 12%. This is our bottom, 12%. As of recently, I would have probably aimed for about 19%. And again, it looks really, really good. We're going to see what it does, but there's a pattern in here you may not see. We're going to cover most patterns. The biggest one that we're going to cover are triangles, whether they're descending, ascending, or horizontal. We always trade off of horizontal and most of all ascending triangles. This doesn't have an ascending triangle. This does actually have a horizontal triangle though, and I'll show you. So while you're doing your channel play, right, you'd be like, this is just a channel. I always look for trend lines. Even though they may not be severe, you may want to come down here and be like, well, what's this over here? Any lines showing? And you'd say like, well, I guess if you were to cut through, yada, 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 it looks really good. What I would have done is always start at the bottom left. You always look for trend lines just in case. Scroll up and would have seen, oh, well, these line up almost perfectly, right? We then could have done extend the right always so it stays updated, redraws the channel, and would have seen if you would have made this line, you now also have a triangle forming as well. And again, this is where it can get confusing with too many lines. Of course, I would definitely just make this white. I could also make this dotted if you wanted to. Do something to make it look different, of course, right? Now, I personally use golden. So again, I would have just made this dotted, golden. I know this is not my triangle line. So you'd be like, oh, it's an ascending triangle. Well, it can be considered that. You could also consider it a horizontal triangle, and this is what we played off of. We said this is definitely a resistance, showing higher lows throughout. And again, we have a triangle forming, and then it broke out today. So again, you have to make sure you always look for trend lines inside your supports and resistances. With this kind of play, I would choose one or the other, right? Do I want to do a triangle and play off of that, or do I want to do a channel? So again, you need to make sure you're being aware of these things. Again, at this time, you would be like, oh, we have a triangle here. You would have said we have an ascension, right? You could have played off of that and see what it worked. But again, it broke, so you would have gotten rid of it, right? You need to be ready to add lines, subtract lines, and be ready to play with these kinds of things. I have one more example for you. So I've talked about how stocks can do three things: ascend, descend, consolidate. And again, I think this stock, it really shows you how powerful that can be. Let's check it out. So again, if you were to think that stocks can do three things: consolidate, ascend, and descend, pattern that with this. When a strong support or resistance breaks, the trend line needs to be reset, and then everything needs to be reset. Here's Teva. Teva is a great example of this. Let's go over to this area. This is a perfect example of a triangle that we just talked about. But again, you can come in and say support, 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 support. Again, real easy channel play. You could have been playing off this channel perfectly, back and forth, making really nice 14% moves back and forth. Again, if you're thinking the whole time that this is just a channel play, you're probably correct. But again, anybody who's been listening to me saying you need to always check trend lines would have seen that this was definitely getting higher lows, and you could have came over here, placed this, and seen almost perfectly you have a triangle forming, right? Really easy to read triangle, and then over here, really easy to read triangle was forming, right? Anywhere from here over would have been fine. It just comes down to preference, but again, a pattern's forming, and then of course it breaks the support, which then means this old pattern, and as you can see, really easy to read triangle throughout, looking really good, right? You would have been hoping that it would have bounced here and gone back up, and again, that's why we have stop losses. So again, this breaks down, and now all of this is now irrelevant. I would keep this as a resistance line moving forward. This is going to be a strong resistance. It comes down, and again, this is what a lot of traders will do, is they'll try and catch these bounces. I avoid these at all costs. We call this catching falling knives. It's like in a kitchen, if you drop a knife, don't catch it, let it hit the floor, right? Same with this. It's still falling, it's still falling, it's still falling. If you're trading this, let's go back, let's just look. If you're trying to trade this, there's nothing. There's no pattern, there's nothing to go off of. Now we're starting to see some life, but again, there's absolutely nothing to go off of. I'm still nervous. Now we're seeing some life, right? So again, if it keeps showing some life, I'm watching it, and I'm going to be like, all right, we have some new patterns forming. We have a new price level there, a new price level there, one here, and one here, right? Now we have a new area. Strong resistance still up here, but now we have some new channels to bounce off of. This is the bottom. It's showing some life. You could buy in here, and now you can see it's making some moves, making a channel. It's now consolidating. So you had your you had your consolidation, descension, and now it's consolidating. It's now consolidating. Oh, it's now taking off. It's now ascending. We can also see that when this strong resistance was broken, we need to maybe reset some trend lines. You would have been like, well, let's see if this happens, right? You would click this, extend it to the right. You would have been like, well, what's happening here? Well, it broke again. So I would be like, okay, doesn't really count. Don't like it. We just now can see that this strong resistance is here, right? It's still living, comes back down. You could have bought in. You'd be like, all right, I could try buying in. I probably wouldn't have. And then it takes off and ascends. So again, you can just see from this alone. If I were to draw a line here, this is consolidating. Draw a line here. The stock was descending. Draw a line here. It was consolidating again. Draw a line here, it's consolidating. Draw a line here, it was ascending. As you can see, the stock was consolidating, descending, consolidating, ascending. So stocks can do three things: consolidate, descend, and ascend. And as you can see, every ascension and descension came after or before consolidation. So again, some stocks will just be really, really rapid and have really sharp dagger moves and kind of come down. But again, most great setups come from consolidation. Now again, the consolidation may seem like a channel, and it is. But again, these channels do not last forever. They're going to break up or break down. So again, you want to get yourself in the position to get as low as possible into your channel buy-in zone so you can avoid any type of big risk you may take, right? That's the whole entire point, risk management. So today, what did we cover? And again, we really beat into your head: supports, resistances, trend lines, these lead to channels. And again, these are the three main things you gotta look out for. And again, was this probably a lot of information about channels? Yeah, but again, I think it's great reinforcement for you because next, it gets a bit more complicated. So today, what did we cover? Firstly, we looked at how to properly draw channels. We know that they have a support and a resistance. They could be horizontal or diagonal. Every single channel should have a buy-in zone, and then everyone should have a selling zone, support and resistance. Next, we discussed midlines, how sometimes your ascensions and descensions, the channels up and channels down, these should have midlines in the middle. And again, we looked how to draw them. You just hit right click, duplicate, move it up. And again, this should give you an idea of how consolidation works inside of channels and how sometimes they can diagonally go up and diagonally come down. And these trend lines act just like supports and resistances, as we discussed. Next, we discussed how channels do not last forever. Do not fall in love with one. Do not get emotional. Cat, which I love, will eventually break. That's quite all right. It all comes down to knowing that that is an ascension, and ascensions will end. They will go to a consolidation or a descension, right? And your horizontal channels will not last forever. Those will turn into an ascension or a descension. So again, do not get sold on the idea that because it's channeling up now or a horizontal channel, that it will last forever. It will not. You can buy in at the best possible price and still lose. They will break down, have a stop loss. That's another discussion. But again, make sure you know that they will not last forever. They will eventually break. Next, we discussed the importance of consolidation. Again, if a stock is going horizontal, it's building up for something. I want you to imagine a bed spring or any kind of spring. As it consolidates, as it gets tighter and tighter, as the channel gets tighter and tighter, those moves get smaller and smaller, it's building up. There's tension. It's getting smaller and smaller, and then bing, it breaks out, right? Consolidation should be seen like springs. Yes, you can abuse it. Yes, you can make a lot of money, but again, it's going to break out or break up. So you got to make sure you have a stop loss, have targets, but again, do not be quick to sell, right? If you hit resistance and it's at the resistance line and it's kind of holding there for a little bit, it's consolidating, give it a few days and see what's up. A great example is Beyond. I'll show you real quick. So here's Beyond, and quickly I just want to show you the power of this. It came down to our buy-in zone. I was like, yo, this is where you want to buy it into. We bought in, it moved up, and people are like, oh, we should sell. I'm like, no. Consolidations lead to big moves. As you can see, it consolidated, and sold off. I was like, let's give it a minute. It consolidated, and then, boop, it took off. So as we can see, consolidations lead to really big moves, up or down, and again, just have a stop loss and you're going to be just fine. But again, if you sell too early, you're going to miss these every single time. And lastly, channels will have patterns. These are just setups. Channels are setups, right? Supports and resistance, trend lines and channels are just setups. There will be patterns forming, and you need to be aware of that. You need to go on a broader scale, a year, 180 days like I do, and you got to check out for patterns forming. Triangles, wedges, flags, pendants, things we're going to cover, especially triangles are the best for channels. Those are going to form. Those will be bearish or bullish, and that will determine if you should buy in higher or lower. And again, you should always have a good loading zone, always have a plan of exit and entry, all those kinds of things. Real simple things we talked about. And again, beating it in now so you don't get burned later. So we're going to talk all about that. We're all going to put it together in this lesson. Again, this may be very, very basic to you, but doing it correctly is the foundation of your whole entire setups. The better that you can get at this and the quicker you can get at it, the more successful you're going to be. With that being said, have a good one. Catch you guys in the next lesson. Appreciate it.